What is filing status? The 5 types that decide your tax bill. What if one checkbox on your tax return could cost you thousands of dollars? It can. That checkbox is your filing status. Today, I'll walk you through the 5 filing statuses and how to pick the right one. Filing status is the very first choice you make on Form 1040. It controls 3 things: your standard deduction, your tax bracket thresholds, and your eligibility for credits like the Earned Income Credit and Child Tax Credit. One important rule: your filing status is based on your situation on December 31st, not July, not the day you file. December 31st. And if more than one status applies to you, the IRS tells you to pick the one that results in the lowest tax. So what are the 5 statuses? Number 1, single. If you're unmarried, divorced, or legally separated as of December 31st, and you don't qualify for anything else, you file as single. Standard deduction $16,100. Number 2, married, filing jointly, or MFJ. If you're legally married on December 31st, you and your spouse can combine everything on one return. This gives you the highest standard deduction, $32,200, and the widest tax brackets. For most couples, this is the best choice. Number 3, married, filing separately, or MFS. Each spouse files their own return. Sounds simple, but there's a catch. You lose access to the Earned Income Credit, most education credits, and the Child and Dependent Care Credit. MFS rarely saves money. Always calculate both ways before choosing it. Number 4, head of household. This is the one most people get wrong. Standard deduction is $24,150, much better than single. But you must meet all 3 requirements. You're unmarried or considered unmarried on December 31st. You paid more than half the cost of keeping up your home, and a qualifying person lived with you for more than half the year. Number 5, qualifying surviving spouse. If your spouse passed away within the last 2 tax years, and you have a dependent child at home, you can use this status. You get the same standard deduction and tax brackets as married. Filing jointly, $32,200. This is a lifeline many widowed taxpayers never hear about. Let me share what I see most often in practice. Head of household is the most misused status I come across. The scenario goes like this: a couple is having marital problems. One spouse moves out for a few months, and the one who stays files as head of household with the kids. But unless you lived apart for the entire last 6 months of the year, you don't qualify. The IRS catches this through matching programs regularly. The second mistake is sadder: widowed taxpayers who default to single because no one told them qualifying surviving spouse exists. If you have a dependent child, you can get 2 full years of MFJ equivalent treatment. That's potentially thousands of dollars gone, just because nobody mentioned it. Here's why this matters in real numbers. A single parent filing as head of household keeps the 22% tax rate up to $66,750 of taxable income. As a single filer, that same person hits the 24% rate at just $50,400. That's over $16,000 of income taxed at a lower rate just from choosing the right status. One quick note for New York residents. New York requires you to use the same filing status as your federal return, but the state standard deduction is much lower, roughly half the federal amount. So even if you take the federal standard deduction, it might still be worth itemizing on your New York state return. The bottom line: every time your life changes, your filing status might change too. Marriage, divorce, separation, a death, a child moving out. Don't wait until April to figure it out. The right answer starts on January 1st. For the full guide, including an interactive tool to find your exact filing status, visit eTaxWise. Link in the description. I'm Deborah, your enrolled agent, and I'll see you in the next video.